Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer-term subscribers and viewers, please like those videos and leave a comment to help it going. What's going on, Amit? We can start off. I know you're in the last one. We can start off with Tesla. It's just easier if I keep this to the stock segment and so we can focus on the futures and commodities. There's just so many things going on right now. It helps to break it up a bit. So, welcome, welcome, welcome. Let's get right into it. Tesla closing below that 62.5% level, which I was watching at 771. So, this probability wise favors the lower prices. Could we get a bullish pop? Yeah. We haven't been able to get above the daily rotation zone in quite some time. You see, even on these pops, daily rotation zone, which is the top of it's the blue line. That's why you should watch. Before you can really get bullish on that, you got to get a close above that. Not just a spike through it, but a daily close. And probability-wise, when you have a run-up like this and you close below the 62.5% level, which is right here, it statistically favors retest of about the 87.5 to full retrace. And let's see what Amit says. Yeah, close below 62.5. Especially on the daily, that's the really ones you want to watch, Amit. In case it did bounce back up in the close, which it did. It bounced, but it could not get above that 62.5. If we get below 745 or we're in a clear path, you're already in a clear path. This was a clear path, and you're closed into it on the daily, on the 4 hour, the 1 hour, you're right at this pausing bar. So this was the pause. Remember, you were already in it on the two longer terms, and you came down here, and this was the pausing area we identified before with your harmonics. So this was a major area once we broke below 771, and we spiked down there on the open, and you look at here. Look, this is why I love the harmonics. Look at this opening. I'll just review this too. Coming right down here, again, we're not trying to hit the low because many times you can't buy the exact low or the high, but you come down here and then get above it. Nice little reversal pattern. What do we start watching? Now this, how do you know if it's going to close the gap? Well, again, statistically, if you get a close above the 62.5 here with the closing price to the low, then you target the gap fill. And it did get a close above this level. You see the gap fill and then a roll over again. And Tesla is a great one to fill gaps. And then this key area held. So now what do we do? What do we do? What do we do? Well, what do? We clean up some old levels. By the way, just to let everyone know, it looks a little funky, but this is a valid double bottom on a 1 hour time frame. Okay, so how could you get a bullish play if you get the move is above here at the high of 789? I'd at least want a shorter term closing bar above there, and then you could see a run to 822, 833, and then you have the major area about 840 to 844 for a top, and those are the full targets. Hey, Tesla Force, how are you doing? So that's the only bullish play right now. Unless the Nasdaq has something up its sleeve and does a super strong rally overnight, then the only thing I would watch for is a gap fill or a partial gap fill, and then rolling into that bullish play. However, the probability still, as we started off, favor a further downside price action. So we start breaking below the 750. I'm really watching the 754 area. 754, 739.56. Then you look at this harmonic cluster at 724. This orange line was a prior first target for that massive weekly topping pattern. And we have other ones below that. And then it would be back to 700. Then below 700, if it breaks down below that, the next major target is 664. Can you the double on the 1 hour? Can I go over it again? The double on the 1 hour would be above this bar's high. And technically, It's slightly lower probability when the low of either shoulder and the high of the shoulder are the same trigger point. So this, you have the low being the left shoulder low or the left bottom low, I shouldn't call it a shoulder, and the high being the peak that you got to get above. Slightly lower probabilities, but that's the way it actually trades out the best. Do not take this as the double point. This is the double point. With all the trading and research that's been done, that's the key point for the trigger, not this. I know it looks weird, but that's the way it works. And then you have 822.41, 833, and I'd be focused on those. And then really, that's why I said a zone for the end, because you have the candle bodies in this final target moves beyond the move that started it. So I treat this as a target zone. So that's your upside and downside for Tesla. And before anybody, again, I can't give individual advice. This is educational purposes only. But your 200 here, which is back below, and the daily rotation zone, there's nothing even besides this little intraday play. There's nothing longer term bullish. You'd at least need to close above here, and then the target would be the 50 EMA, which is at 896 at this point. All right, so again, your upside super limited, and longer term, we've triggered massive sell signals in this. I wonder where it sits on that weekly pattern. Yeah, and on the weekly pattern, it's even we have multiple weekly sell signals on this. You are welcome, Amit. So that's Tesla. By the way, I forgot to go over these. Let's see. We have after the close. This is what we have COUP, which I'm going to glance at because that's just getting destroyed, and we've been very bearish on COUP. So I'm going to call that up. That's the main one I'm going to look at right now. And then before the open, by the way, not much going on here. It's just going to be a macro trading. I'll glance at Dole, but that's about it. So nothing else but with that, I'm going to look at COUP. And look at that. Now, I know after hours is much lower, but here are the harmonics. For anybody wanting to learn harmonics. So we had the major cluster here before 119, breaking below that. And then the next target was 88.78. And now, since this is ultimately, we closed back down by that next thing, and now after hours is at 64.60. Now, this was the next pausing bar on the longer term one. And then, which gave me 66.29. Okay, and below that, and I'm not expecting it to hit anytime soon here, but it's 31.84. Why is this bearish? This has been bearish, really bearish since the breakdown out of this consolidation area up here. First cross the rotation zone, and you watch it's just trading the rotation zone down. And the weekly went bearish way back here. Way back here in March of last year, and you see it's been falling even on these rallies, and that's why you watch the daily and weekly rotation zone. You see here, can't even get into the weekly rotation zone on a closing basis. So, and this 66.29 is in this prior support area there. So the next major thing, if it did break below there, you'd be watching, and again, I wouldn't be chasing this. There might be some bounce plays on there, but they're super aggressive. And what we tell people is either wait for a long-term bottoming pattern, because why? Look at these little bounces. You get in, and it's just, you have to get your timing right. They're super little bounces. So why don't you trade something that's strong, like this little bounce? Even if you got on this bar, you had to get out 2 days later before getting massacred. This was at least a little safer bounce, but again, couldn't get much of a move up. See, this is a 2-day bounce. This is 1, 2, 3, 4-day bounce. Why would I be playing that? Now, if there's a great long-term bottoming pattern that's playable, there's just nothing yet. So it's just bleeding out. Let's take a look at Apple. Now, Apple, again, I was going to, if we get a tech bounce, I was going to look at this, but now it's below the 200, and it confirmed it. Show you what was bearish with Apple today, too. back below the 200, closing below this 152. This was a major significant low from the 24th of February, and couldn't get a close back above that level. Retested the 200 and rolled over. What's that telling me now? That even if we got a strong rally in tech, this prior support zone is now major resistance. You can see how long it held. First held at the end of November, held at end of January, dipped below on this big gap down, and held at the end of February. I wonder what's going to happen by the end of March. But that's key. Also, why this is very significant, I will show you a gap fill play that failed. Does anything work 100% of the time? No. If you have it, tell me about it, but I bet you I will find where it does fail. This has an incredibly high percentage once you do get a close above the 62.5. But you see here, running up here, could not do the whole full gap fill, slamming back into that 200, and kaboom, rolling over. So when something doesn't happen and accelerates back to the downside, that is very bearish. Next support level we're watching is 148.13, then 144.26. But this Apple also another mega cap that is breaking down. What else was I going to look at? Oh, we got to check in. ARK. Why am I checking in on ARK? Because the next harmonic 52.43 hit. Next area hit. So, boy, ARK is this is a disaster in slow motion. A disaster in slow motion. So the short-term levels. The next major area I'm watching for a push lower is 45.31. You can watch for some minor support if we do get that bounce in the NASDAQ. If it sells off tomorrow morning, I'd be watching around 50.76, but major's 45. But here's another instance. Look at the daily rotation zone. Just bounce into it, sell off. Bounce into it, sell off. Into it, sell off. Into it, sell off. Into it, sell off. So guess what? Even if you bounced all the way back to 65, be watching for another sell-off. And here's your weekly. Now, it is getting overdone, and we are starting to get some divergences, so I am going to watch for a little stronger bounce. But the weekly would be 65 also. And you see, we haven't even closed into the weekly rotation zone since it went bearish back at the beginning of November. So I think this is a fool's play to keep trading ARK even on bounces, but that's the play for ARK. Let's see what else. You have mRNA and SMAR. Rich, welcome, Rich. Moderna, probably a spike up on that Delta Cron or whatever that new friggin' variant is. By the way, that potential double that never triggered is off the table. This looks like it might be putting in. We got this, some diverse. No, never mind. Again, ugh. Another one. That's not very, I guess the only thing I'd be looking at now is if you are on the bullish side based off something fundamental with there above 176, you might have a little play. Let's take a look at this. Above 176, you might have a play. Into this advanced clear path move with a target of about 211. Let's see how that plays out on the weekly. I'd bump down that target below that because your weekly rotation, I'd target 200. But that's the only play here to the upside potential. It is trying to put in a slight bottoming pattern, and there's no clear path to the downside until you get below about 117. So this is just something... there's not great trading in this for me, based off the stuff I look at. Looks like it's trying to get some kind of short-term bottom, but there's not much upside yet at this point. So it has to, for from a technical perspective, even if it gaps up in here and then it has to retest key support and show it can hold it, and then it might be a longer term play. Other than that, let's just see where the next key. I mean, this is just, I want to see where our major targets are. And I'll get to the more questions in a second. Could we return? Yeah, easily. Longer term, $75 easily. Longer term, that's a longer term projection. And then you wanted SMAR. Smart sheet. Oh, when's earnings on Smart Sheet? That is in 2 days. Whew. You're getting a possible divergence here, but so it's running out of downside momentum, but you got earnings coming up, which is a crapshoot. Let's just see what this is looking like. I mean, that's a crapshoot in this environment. And technology getting beat up. Remember, in the sector overview, technology is in bearish mode. Your next support's 41.58, which is right around this key area. And see, there's a lot of stopping points in here. And then the next one's about 38. And with this break lower, your 46.60 is first key resistance. And then even if it ran up to 52, it's a potential rollover for another sell. These are ugly. Could I see a possible bounce on if they beat on earnings or something? Yeah, but that's a gamble play to me. There's no, I don't have a great pattern here. There's no solid buy pattern. Thoughts on junk bonds with rate hike? The junk bonds, the yield's got to go higher longer term, and the bond price has to go lower, even for high. I think you meant high grade, which HYG. So that's where I'm with bonds across the board. Longer term, much lower prices, which means higher yields. Kathy recommends holding for 5 years to see 4 times returns. At what price? Where do I have to be? I mean, let's get back to ARK. At which price? I mean, she's been recommending that all the way down. So 4 times. If I'm owning from up here, is it going to be trading at 600 in 4 years? Or, I mean, more, is it going to be trading at 200 if I buy it now? I don't know. She's a nut job. I'm sorry. At some point, yeah, you'll get to but you're still seeing inflows in this. That's what's fascinating. The fees she's collecting is simply outrageous for the way this has been performing. So yeah, at some point, will you see 40? If this trades $10, could it bounce to 40? You could see it bounce to 40 after it hits 10. You could get 4-time returns if they don't liquidate it. So yeah, at some point, there'll be a price that it does bounce fourfold. Would I be buying it to gamble on that here? Not in your life. BTC, I cover BTC all the time, Dennis. BTC, Bitcoin still bearish longer term. I think there's going to be some point a massive rout in Bitcoin and some other cryptos. Still trading between my 2 key levels, 37,000 roughly. We start breaking below there. I'm targeting 35, then 33 roughly. The only way I get bullish, even on rallies, even if it gets back to 4,300, which is a significant level, we then target 44,511. The only thing, this is still a valid potential double bottom, but it's got to get a close about 45,855. Then I'd be targeting 51,621. That's the only long-term bullish play. Everything else, right now, it's in no man's land. And the only aggressive thing would be buying against support and selling against resistance at these significant levels. But you start breaking below this 37,000, you could be back to 35 in a blink of an eye, and then possibly back to 33 as equally as fast. Luna, which I don't really cover, but we can look at it. I mean, I have covered it before. You can see here on the charts. Luna. Let me just see here where we sit. Well, I wonder where that topped out on this most recent swing. So you have this prior high, you have the harmonic there. Just looking at a couple things. This is not a double top, but you break below this key area, especially you get a close below. I know people call that a double top, but it doesn't fit the rules. 78, you start breaking below 78. You have a minor stopping point here, then you're into a clear path move. Looks like this 200 is holding, and this clear path move, the breakout zone would be here. So I'd be watching, if you did trade below 72.66, I'd be targeting 60 bucks. 60 bucks to 57 bucks right here would be my major target for a potential bottoming pattern, as long as the crypto market doesn't go to complete crap. That would be my decent buy area from my perspective, because you could apply some lower term risk. Again, educational purposes only. Can't give individual trading advice. What I'd be watching for now, though, is if this is a potential head and shoulders. If this comes up and rolls over again, I'd be watching. We don't have an official neckline yet. I'd have to redraw that with the official neckline, but I'd be watching for this kind of topping pattern for a preemptive sign it's breaking down. Now, what would put it in bullish mode again? Let's see. The little key thing to do, watch for, is on this pullback move. If you want indications, it could be getting, you want to close above about 97.20. You get a close above 97.20, then you can, then I would personally, based off the analysis I do, shift to minor, very minor bullish mode, and the next target would be 110.60 area. So there's your Luna analysis. Rig, Oxy, double top triggered. Let's take a look. Thank you again for being here, Rich. Yeah, that's very sloppy, but that does work. That's why. And it's actually hit the first and second target on the 4-hour time frame and the bottom of the rotation zone. Again, I've been watching, we talked about this, watching for bigger pullbacks, and this is prior support. I mean, resistance becoming support, bottom of the rotation zone daily. If we did break below that, you got your weekly coming in and your next support at 377. So this would be area, you get below 377, that's a stop level for me. I'm waiting for a re-entry pattern. And OXY Occidental, which I know you put in the last one about Warren Buffett. See, this doesn't, what time frame double were you watching out at? Because I don't have a double on this one. But that's super ugly. That's too ugly for me to trade. But I'd be watching this 51 area. If it breaks below there, I'd be targeting a bigger pullback. Because not for the short term. Then for the long term, watch for another buy position. Again, longer term, that's a longer term still play, but it has run up very far, very fast. Got here late, no problem. I scale at 2/3 of my position on CVX. Still looks heavy to me. Your thoughts? Chevron? Yeah, with oil, I mean, I covered oil in the last segment. That leaning against it completed that double top pattern to all three targets. I think you're again, I can't give individual trading advice, but you start getting below this 160, this low right here from the 9th of March, 161.21, and I still see potential for another bigger pullback in oil. You get below there. See that you could even that second target back to 151. It is looking heavy. 151 just takes me back to the weekly rotation zone. So I think a lot of this oil stuff looks short-term toppy based off the overextension on the run-up. But here's what I like to do. You took some partial profits, which I completely agree with, and then I like to trail out a stop for my final position. And then I look to scale back in on a pullback. Again, I would not be shorting this because of oil and what's going on in the world, but I would be looking at some of these key levels for re-entry positions. Tesla will hike prices because of inflation. Completely agree. They have to, especially the raw material costs. They have to hike prices. But they're now pushing out deliveries on Tesla without, if you don't take the full self-driving option, then you're getting your delivery like pushed out by months. So they're playing some games with that too, trying to make up for the supply chain, and now with the increased costs of like all those horror goods that go into an EV have skyrocketed, even if we see a pullback in them. All the pricing pain is ultimately passed on to the consumer, hurting us all. That's why if they try, Elizabeth Warren, we're going to tax oil profits, and Bob's talked about this. They have a built-in percentage on oil profits. So if the price of stuff goes up, they make more money, but they're not increasing their percentage. Here's the deal. You increase their tax rate, though. You do windfall taxes on oil companies. That also gets passed on to the consumer. It's not like they're going to eat it. You're welcome, Dennis. Thank you again, Dennis. I think you're a newer person here. Glad you're here. Please do, if you have not already, consider subscribing and ringing that bell and joining us on a regular basis. That's what we do here, trying to provide high quality technical analysis and teaching it at the same time. Back to Chevron. Again, now getting out of the overbought short-term position, but this is it is looking very heavy, sterling. So my final trail, to reiterate my point, would be this key level. Then I'd be looking out of the whole thing and re-entering on a pullback. Cvx downgraded by Morgan Stanley. Thank you. Of course they did. To what? What's their new target price, Rich? Net, please. Sure. Net is back down into triple bottom territory. So this double bottom, which did not get a close above there, is off the table. Triple bottom territory. Your little bump on earnings has faded. Oh, these things. What is this PE ratio right now? Oh, it doesn't have them because it doesn't have any earnings. So no PE ratio in Cloudflare. I forgot about that one. I'd be targeting. I wouldn't be touching this. That double is now triple. Again, I wouldn't be interested in this at all. There's better stuff to trade. You break below 76.61, 58.48. I'd probably bump it right in front of that harmonic, maybe $60. That looks like a pretty decent support level. We can fine tune. This is a great area. Also, reverse harmonics. I'd just be using these as very minor stopping points, but I pay attention to 65 and then 58 to 58, 50 to 60. But this is nothing I would touch. Longer term, no earnings, so no PE ratio. You see weekly rotation zone, popping back up there 2 times and then rolling back over. Boy, this could easily, longer term, you could easily see this when we have the next major downturn in the NASDAQ. You could easily see this back to 40.35. Vertical up, vertical down. You just get these hitches, even from a weekly standpoint, with using the candle. Remember, use candle bodies for support and resistance. Right here, you got those resistance areas into the weekly rotation zone and rotating back down. So this is a triggered rotation back down. I'd be focusing on much lower prices. So this could be a potential put play at the right timing. Even on a rally back to 114, it could be a great put play. Sashi, I already did COUP. Again, just for a quick reminder, go watch the recap video. But just 66.29 was the next harmonic level. Then 52.02 is a key support level. And then longer term, I'm still watching this do a round trip. But here's your support zone. Would not touch this. If you want the full analysis, we already went through that one. Netflix. I did that right after. I think I did COUP right after Tesla. So as soon as I finished up Tesla in the replay, you can watch for COUP. Oh, Netflix. This is just, again. Whew. Boy, this is going to be a lot of long-term pain for a lot of companies. Netflix, 307. Let's see where that sits. Oh, did it? Yeah, it finally filled this gap. Finally filled that gap. That's where it paused right now. Look at that. Finally filled that gap from this area right in here. Below that, see, now you're still in a clear path move. Target of there, and you got a harmonic. So 306.63 to 307.77. Then 264.08 long term. Now on any bounce plays, I'd just be watching the daily rotation zone, the top of it. For the case 374. From a bullish play, is this a double? No. Nope. There's no good bullish play. You got a clear path move here, but you have the rotation zone in the way. So there's no great play for me. There's no play for me longer term, because even if you get above 374, your weekly rotation zone, which it hasn't touched in a while, is coming in at 384. And you look here, that's some pretty significant price action. Okay? So my upside, even on a stronger bounce with this, would be 388. Could you be very nimble and play it? Yeah. The challenge is you have stopping points at 375. So if you got momentum bars to the upside, that's the only way you could play this. But it's a very short-term play, because longer term, I'd just be watching for another rollover play, 307, then eventually 264. So this is round tripping and looking like it's going to be in a lot of pain. Now it is oversold. You are running out of some momentum. So if you got remember, we are watching for that bottom in the markets, a short-term bottom in the markets. So that's the only way this could be a bullish play for me, very short-term. I'll get to those, Michael. Ackman definitely sold his stake in Netflix. Tech is gonna continue to get hammered as long as bonds continue selling off. Yep, I agree. Especially high PE, and so many of these things have high PEs and crappy earnings. So I completely agree, Sterling. And remember, we in the sector overview, tech has a major sell signal long term in it. So that's why these bounces. I don't like to play these bounces. And Netflix that's just ugly. Home Depot. Home Depot is still a potential bullish play for me. No double bottom yet. So to the upside, I'd still need a move with the rotation zone. Again, if we get a bounce in the markets, I'm watching for a short-term Home Depot play above 331. Nothing to do right here. Areas that if it continues to sell off, I'm watching for this prior support. My target from before, remember we had a double top, which we hit the targets. And my target, I was watching around 300 bucks, which we bounced off of. So right now it's in no man's land to me. It's a nothing. It starts getting interesting back between 307 and 300. Not as a buy there, but to see if it can hold that support level. So that's going to be interesting for me. But my slight little bounce play is above here. We still have a gap left behind. And that's even aggressive in a return to this area of about 343 to the declining 53.46. Again, very aggressive play, not to just buy long term and sit on it. There's a lot of damage that's been done to this, and there's no long term pattern. Now, if it pulls back down in this area, forms a really nice double bottom, that triggers, it could be a nice higher probability move to the upside, but we don't have that yet. Bristol Myers, again, we are long this for a longer term play. Key thing I'm keeping an eye on is this little double top right now. 67, and that could be even a pullback to 65 area. So that's what I'm keeping an eye on, but this is still a longer term in bullish mode. Even on a pullback to 65, you got the weekly rising rotation zone. What changes that is if you get a close below the 65 level. Because then you're back close below the weekly rotation zone, close below this prior, let me show you this prior resistance becoming support. So then I'd start watching for a bigger pullback, and that's where I'd be short-term bullish. Short-term bearish. But other than that, I got to stay longer-term bullish for the time being. But this is it's hit some very key resistance. Now you start getting momentum above about 70 bucks. See, it's didn't quite get there here. Came back up with a divergence. Couldn't get above there. Then you major sell-off. Back to here again. Pulled back, caught on the daily rotation zone. Back up here again. Don't know if we got divergence, but what's more troubling is the double top. Now, that's nowhere near triggering yet, but that's what I'm watching for. Because the other side is if you can get some momentum above 70 bucks, it's now test this area 1, 2, 3, 4, 5, 6. See, it's chipping away at this area. So if it can get a key close above there, 71.82, 73.88 are the next harmonic targets higher. All right, Michael. So that's the thing. It's sort of in no man's land because this double doesn't even have to trigger. Just could keep moving higher because it keeps softening that level. KR Kroger. I don't have a double. You might have a double the way you watch stuff, but you start getting a close below 54.50. Yeah, we could not get above that harmonic. This got overextended. Again, everything rushed in. I'd be easily watching for this gap fill. And I'm more watching the gap harmonics. Here's look at that level. See this level right here? And look where the 62.5 from the gap harmonics is. Start getting below that, target the gap fill. That's my play. Then actually it's another interesting longer term play in Kroger. So that's how, again, this stuff can be applied to short-term charts, long-term charts. Learn the levels. Veil and yeah, that's a nice pullback in Veil. Didn't even get that. I think I mean, we're getting that commodity pullback, but as long as Veil stays above here, right in here, as long as it's above 1650, it's a longer term. It's a pullback play. Again, you get a close below 1650, then I target much lower prices. I am a huge, now uranium got hammered today on a pullback, but I am super bullish on uranium. Insanely bullish long term on uranium. And I talked about that in the last one, trading it around a core position. And I love the Sprott Physical Uranium Trust. Okay. So a pullback, if it gives a pullback to 12, that's from my educational purposes only, is a great potential re-add to a position. And this is one that's fantastic for trading around a core position. If you want to know more about trading around a core position, I sort of outlined it in my market overview video. And it's something you can watch that, gather some ideas of how I do things, and start researching it for your own trading advice. And again, if you want to know more, let me know, because I could probably put together a webinar on it. These are the last couple. You're bullish because Europe will use nuclear energy instead of gas, so I think they're going to have to use both. And a lot of places, including even South Korea, are going to extend the life of some of these nuclear power plants they were going to mothball. And it's another physical commodity that it's the last time we had the supply demand cycle was this poor for uranium, it made a massive run higher. And that was in, I think it was 2005, 2006. So this is just building a longer term uranium position, because there's very strong upside fundamentals. And again, I showed this chart last time, URA, this is another one to play. Again, this is trading around these key levels. So you can trade around them and trade around a core position and harvest the price and build a great long-term position. And just until this breaks out. Now, once it breaks out, as I said in the last webinar, once it breaks out, you just want to go with the breakout. You don't want to be unwinding. But until that happens, there's major buy-sell levels. And you just keep trading between those buy-sell levels around a core position. And then you build a long-term lower cost average for an incredibly bullish play longer term. That's from my perspective. I implore you to do your own uranium research. Just like I'm gold and silver, longer term, very bullish plays for me, but they're still caught in a major range. Thank you, Sterling. Thank you for that super chat. I really appreciate all the super chats. Thank you so much, Sterling. Again, so this is a little good thing to watch. A lot of really professional traders on something you're long-term bullish on trade around a core position. Lots of amateurs don't even know about it. And I'm trying to teach you something that I did pair trading for years, and it's a technique that you use in pair trading too. Trading around a core position, trading within ranges, trading, you have a bias. Okay, that's how you set up a pair. You have a bias with one company you're long, one company you're short in an industry, and you have a bias, and then you set up your ranges, and you trade around that core position. And you can do the same thing, especially with commodities. Okay, because look, let's say you're long-term bullish, like here. So let me show you the chart. So you broke out of this range, which was super bearish down here, and then you start getting a bull run, and this is where you start trading just the pullbacks. Then you start getting a bigger pullback. You go back to trading around a core position. When you get a really momentum breakout play, you hold at key levels, you unwind a little, and then when it starts pulling back, and then once it's caught in a range again, you trade around a core position. And then once it makes a momentum move higher, you stick with it. And when it gets way overdone, you start unwinding a bigger position, and you be more patient on the pullbacks. There's an art form to it, but you can use these harmonic levels as buy and sell points when things are caught in ranges. And what you're doing also, another hint for the people still sticking around here, I appreciate it, is this is where it's not dollar cost averaging, because you're already determining what your maximum risk for any position is, and you're just saying, okay, I'm allocating. Let's say you wanted a 5% position in uranium. So you're allocating, let's say you were already in with 5, or let's say you were already in, like I like to divide it into 10 increments. So that would be 0.5% increments. So let's say you put on let's just say you started up here. You put on 0.5%. Okay? You have a 1%, 1.5, 2, 2.5, 1.5. 1, 1.5, 2, 2.5, 3. I'm just giving you some examples. Again, educational purpose only. 2.5% position, 2%, 2.5, 2%, 1.5, 1%, 2%, 2.5%. So you see how you're trading around this position, but you're getting in your harvesting price, and you're actually lowering your average cost, even if you started up here. Even looks like, look, oh, it's a brutal pullback. You have a great average cost by doing that. But you've already planned on dividing it into like 10 ads or 8 ads. Does that make sense? Let me know if that makes sense. Interested in any and all things you got long-term buy, sell system courses, trading around core position, all your nuggets of wisdom and experience are greatly appreciated. You're very welcome. Again, let me know if that made sense to anybody who's still here. And you get rewarded for sticking around. And that's on something I have to be fundamentally bullish on and technically bullish long-term. It's not something, if you're not fundamentally bullish, it's not something you want to be doing. So, with that, not seeing any more questions. By the way, if you've learned something and you're new here, please do consider subscribing, ringing that button, ringing that bell, and hitting the like button. Longer-term members, please leave some comments and hit those like buttons. Until then, we'll do the market preview tomorrow at 8 a.m., especially in these environments. Thank you, Sterling. Just a different way of thinking. Yes, and there's many different ways to trade, and that's a great way to apply to certain things. Again, it's not for everything. You don't want to trade momentum stocks around a core position, because you'll never get to really add and subtract. Yeah, you're welcome, Michael. I'm glad it makes sense to you. So that's something to play with, and I've given you a lot of hints right there. So with that, I will talk to everyone. Can we do those tomorrow, Rich? I'll glance at Lily, but that's the last one. Lily, again, we have it. I have Lily in my portfolio. Looks like we're pausing right now, so I'm watching for a potential pullback in Lily. But I'm bullish on Lily. So I'm just watching for this pullback again, your prior resistance area and your harmonic. I'm watching this 25% area, 261. I don't have, there might be a potential little breakdown pattern right here, but that's just for key support back to this 25% level. And with that, I got to go. My dogs are squeaking. They need to go for a walk. So I'm just watching for pullbacks in Lily. By the way, it still is into an advanced clear path move with higher likely probable prices. Again, not trading advice. Educational purposes only. We will tackle Zim if you remind me tomorrow, Rich. With that, I got to go. Bye for now.